Hello friends, how have you been? Hope you like the rebound in Chinese tech stocks for the last few days. I'm making a call for myself that Hong Kong equities market may be outperforming US tech broad market this year. Why is this the case? Well, Hong Kong equities have been falling for over a year by now, and US tech equities are still showing potential signs of weakness should inflation story come back, with America and Europe enforcing tough energy sanctions against Russia. Inflation number is unlikely to come down much for the West, which makes me more careful about allocating capital into US and European equities. Euro area annual inflation is expected to be 8.1% in May 2022. I really cannot see any room for ECB, European Central Bank, to wait any longer to refrain inflation. But of all the equities markets in the world, why Hong Kong market? This is a good question to ask. At least we do not have to be affected by Securities Exchange Commission's threat of delisting Chinese tech stocks listed in US. This take away the tensions between US and China, at least at this part of the world. If we are to look at one stock right now, I would seriously consider Baidu, which is a leading internet-related company, an AI, artificial intelligence-driven company. Listen to the recent earnings call, and I am impressed with how the company has set its foot in the AI space early, and their Apollo Go is making headway certainly. With that, Baidu also won the first permit in China for driverless ride-hailing services on open road in April 2022. I believe a lot of Chinese companies would want to collaborate with Baidu going forward. And this strengthens Baidu's position in the robot taxi market going forward, which will be a very big market in China going forward. Their Baidu mobile ecosystems nevertheless remains a key cash cow for Baidu and continues to generate strong profit for Baidu, which contributes to around 47% of the advertising revenue of Baidu. Other engines of growth include the AI and intelligent driving, which should bring substantial revenue for Baidu going forward, given that China's main strategy going forward is also in AI and R&D space. It's not surprising for me to see that 1Q 2022 revenue for Baidu to be weaker than 4Q 2021 revenue, given the COVID policies adopted in China in one quarter 2022. This is pretty much aligned with the rest of the China tech companies like Alibaba, Xiaomi, etc. Right now, how I see Baidu is more of a Chinese big tech, which is still at the startup phase, given that it is deploying capital into AI, into intelligent driving, and into the various hard tech technology R&D space. As long as Baidu Hong Kong shares remains above 132 Hong Kong dollar, I would consider owning a position in Baidu. This worked out to around 41 billion USD of market cap at around 132 Hong Kong dollar. It's certainly not cheap for Baidu at this pricing given current market environment, but should be a reasonable price given the long-term growth potential of Baidu. If one is currently optimistic of the Chinese tech stocks that they have bought, it is certainly worthwhile to start looking at Baidu right now. I will appreciate the viewers to subscribe to my YouTube channel if you like my content. As always, this should not be construed as any investment or trading advice. Thank you.